All right. Well, welcome to episode 20 of the Totum Realty Advisors podcast, Trade Secrets. We've got some guests today. We're super excited about it. So sitting directly to my right is James Barrett. He's an attorney at Bernstein, Berkeley. So we're excited to have you here today, James. Thanks. And to his right is Eric Feierabend. He's a partner at Invoke. And we'll let them give you a little background on who and what their firms are all about. And then notably missing today is our best friend, Paige. She decided that we were talking real estate taxes and she wanted to run. She said whenever taxes get brought up, she gets uncomfortable and didn't want to participate. But no, she's just out today, but we're excited to have you guys here.
Yeah, appreciate it.
I think taxes make me uncomfortable, too.
I think taxes make everybody uncomfortable.
They're not designed to be user-friendly. You know
They
that.
are not user-friendly.
And we always have a current event and a topic. So today's topic, and these two gentlemen will talk to us about the appeals process and real estate taxes. But fascinating enough, today, or I should say this week, there's been multiple articles in the paper about how Allegheny County here in Western PA has opened up a special tax appeal window, which is hot news. So we're kind of going to kill two birds with one stone today, talk about that news that's on the Trib and the Post-Gazette and all the local news channels, but then what you guys do for your day job and how it impacts us and our clients on the real estate front. So without further ado, maybe you guys could give us a little background of who you are, your firms, and what your specializations are.
Sure. So James Barrett, like you said, I'm an attorney with Bernstein Berkeley. I've been there for 3 years now. It's gone quickly because I think I started right before the pandemic, and then got out of the office, back in the office. We were actually
Isn't it crazy to think it's been 3 years?
since the pandemic, right?
Yeah.
I guess that's how I could keep track of how long I've been there. But I'm an attorney there. The majority of my practice is with tax assessment appeals, which we'll be discussing today. And then I also just do some general litigation work and some work with our creditors' rights department doing some collections work. So a wide range of things, but the majority of my practice is focused around these tax assessment appeals and real estate taxes. I handle those throughout Pennsylvania. And prior to here, I also did tax assessment appeal work for school districts.
Okay.
So I've been on
both sides
of the argument. Yeah.
And Paige ran away today, but you helped her with her tax appeal. Is this not accurate?
Yeah, that's correct. Whenever she moved into Allegheny County, or I guess bought a house. I don't know if she was here
she
beforehand.
was here renting. But
She was here renting. Yeah, I helped her out after she had got appealed by a school district.
It's cool. Well, welcome. And how about you, Eric? What's your...
Sure. Eric Feierabend, I'm a partner with Invoke Tax Partners. We're a national consulting firm focused on the SALT side of the business, so state and local tax. We've got our real estate group that focuses on...
Did you just say SALT
Yeah,
side of the business?
I didn't know what that meant.
That is
state
new.
and local tax.
I know.
Did you?
Yes.
Oh, come on.
Yeah, no.
If I would have
because that
said
was
SALT, you would have said state and local tax?
Yeah, because that was a huge thing.
Nonsense.
Because in the, was it the Trump, the
boy.
tax laws? That they were saying that because you can deduct your state and local taxes on your federal return, states with huge tax bills, such as in New York or New Jersey or something of that nature, they get a better tax deduction than, let's just say, if you lived in a very low taxing state. So that was a big thing. So I believe the law capped what you could deduct at 10 grand. I don't know whether that's accurate or not.
It might be.
I'm looking to,
to
the attorney,
I wasn't
the
too
tax appeals
involved.
guy for the law.
And anyways,
I do remember people were prepaying at
Sure.
the end of the year to try to hit it and then hit it the next year because it
Yeah.
was changing. I remember
Yeah.
that happening, but I was not too involved with that.
well, I interrupted. Sorry, SALT.
All good. SALT. Nobody is salty about that. We're out there saving our clients money. But our core company function is the property tax, real estate, and personal property.
Okay.
There's 34, 35 states around the country that still tax personal property. So we have some folks that do that around the country, particularly down in the Southeast, Texas, and West Coast. And then sales and use consulting, as well as severance, oil and gas.
Okay.
So our headquarters is in Dallas, and we have 15 offices nationally. I originally, as you know, from Cleveland.
Yeah.
And then 2009. Got married, got my master's, took a new job. I was at National City. I was a banker for 11 years up that way. Started in property tax with a different firm. 2010, moved to Pittsburgh, opened our practice, and built that up for 6.5 years. And then I've been down in Atlanta since 2016.
That's great.
So running the Southeast region there with some of our larger national clients, and it's we're here talking assessments in Allegheny County. So
Yeah.
I've been here since Monday, head back Friday, and that's not enough time. So I'll be back.
And I know that your business focuses mainly on the commercial side of the world.
Correct.
But the rules are the same, whether it's a house or an office building or an industrial building, correct?
That's right. Yep.
So, like I said, the headlines for the last couple weeks and really the last couple months have been about Allegheny County's appeal process in the school districts filing a bunch of appeals to try to raise property values and therefore raise taxes. So maybe, James, you could talk a little bit about, I think it's Judge Hertzberg, that's it, who effectively ruled in favor of the people rather than the taxing authority, to say, wait a second here. I mean, I think his words were actually like, well, I won't even use his words, but effectively saying that the process was not fair, and therefore, the current news is that they've opened up the appeal process for 2022 through the end of March, which is unusual, correct?
Correct. So usually that would be the deadline for 2023 appeals. This year it's the deadline for both 2022 and 2023 appeals based on what's going on in the court case.
So
So that's basically, you get to look backwards.
Correct.
Yes.
Correct. So you go retroactive to tax year 2022 as well.
but it usually is only looking forward.
Yeah, you file in the year of the appeal usually. So you could file a 2023 appeal up until March of 2023, which is actually unique to Allegheny County. In the rest of the state, you have to file by August 1st or September 1st for your next year appeal. So it's really forward-looking, where Allegheny County is a bit unique, but now we're actually going, completely retroactive back to 2022.
And what's the theory behind his ruling? And we'll obviously talk about the whole process in a bit, but are you on the judge's side, the people's side, or are you more in favor of what the county and or the school districts were doing? I realize that puts you in a...
Well, no, I don't think so. I mean, I think it's basically just a numbers issue. So there's a thing called the common level ratio, which is what you apply to market value to get to your taxable assessment in these assessment appeals.
Okay.
So that is a percentage. That percentage is published once a year on July 1st.
And it changes?
It changes every year. So the common level ratio is published every year, and that's what goes into tax assessment appeals for that year. So the original common level ratio for tax year 2022 was 81.1%.
So if you've got a $100,000 piece of property, you're going to get taxed at 80. Eric's got his calculator. I try to keep numbers round.
I can handle that one.
You're going to get taxed on a value of $81,000.
Yeah, around 81,100 would have been the appropriate assessment for a 100,000 market value.
Okay.
Yep.
And ultimately, the way that common level ratio number...
And then let's pause there for a second for the audience who probably doesn't deal with this every day. So then that $81,000 you pay, depending on what city and school district and county you live in, you pay in mills effectively on the $81,000.
Correct. There's a millage rate, and then you have county, local, and school district based on where you're at. Some have a city or a township.
And that varies really widely from 15 mils up to 40 mils in Allegheny County.
45.
Okay.
Yeah, there's some higher ones. I know that there was one that was up to near 5%, which is about 50 mils. And then there was ones as low as probably 2%, and the city's around 2.3 or 2.4%.
Yeah, and it's a function of the base year.
Okay.
Pennsylvania reassesses rather infrequently. The last time Allegheny reassessed it rolled out in 2012, but it was a 2010 base year. So this 81.1% ratio, that was the initial common level ratio that was posted by the STEB last year, is a correlation of sales relative to the base year assessment.
Okay.
So if you take another state as an example, like Ohio, they reassess every 3 years at a
Automatically.
minimum. Correct.
Right.
Mandatory every 6th, but triennial updates by county, and it's mandatory. So you're getting more current market values. The way that the state of Pennsylvania accounts for current market value is to apply that common level ratio to your assessed value, which is your 2010 base
So
year.
instead of reassessing they simply changed the common level ratio.
Correct.
And in 2022, it was 81 point.
81.1.
Okay.
And that was supposed to equate you back to a 2012 value.
You're
Okay,
right.
so the state issues the common level ratio, and that's across the entire state, or does that change?
Countywide.
Per county.
It's
They
a per
issue a number for
Right.
every county, though.
They
Right.
issue a number for every county, so counties with a higher property value versus, let's say, a more rural area.
It kind of relates more back to when their last reassessment was, right? So the further you get away from that reassessment, I mean, I don't know the oldest one now, but there's ones back in the 50s or 60s, I believe, which is their base year. So you have a current market value times a 8% ratio that's supposed to take you back to your value as of 1960.
Right. And that's Butler County. They last reassessed
I mean, I know
in 1960.
Butler's an old one, yeah. Washington recently reassessed. Beaver County's going through it right now, so they'll be putting out their reassessment numbers shortly. So it's happening, a lot around here where I think a lot of the counties are trying to catch up. But Allegheny County's last reassessment was 2012. Yeah.
And then the local school districts pushed this envelope last year. Like, what brought this to the front page of the paper? Because all of this has been happening forever.
Actually, it was not the
yeah,
school
so the
district,
case actually was brought by property owners, and what the case is they're
And is
saying
there residential property owners?
residential
mostly?
property owners brought this one, but I think there may be a group of them now. But ultimately, the main case that everyone's discussing is brought by residential property owners, but they're claiming that the county has not properly reported sales to the state, which is the STEB, the State Tax Equalization Board that Eric referenced.
Okay.
And they use those sales to calculate the common level ratio. So ultimately, the county reports all of their sales to the state. The state reviews those and puts out what the common level ratio is. It's usually 2 years behind. So the 2022 common level ratio would be based on sales that were 2 years prior. So they'll report all sales from Allegheny County is a little weird. So I think it's actually the 2019 sales, because the ratio is then put out in 2020. And I'm sorry. So the 2019 sales, the ratio is put out in 21 and used for 22
Okay.
because of the way it works. A lot of the other counties, ratio is published July 1st. You file the appeal right after, but because Allegheny County is moving forward. But so the sales are used. The state calculates the ratio, publishes it, and then it's used for the tax appeals for that year. So what was challenged was the county's reporting of sales. And it was alleged that the county was not reporting all transactions, and they were intentionally maybe miscoding or, leaving out certain sales that would really move
The needle for
the needle for
CLR.
that ratio. So, usually taxing bodies or the county's goal is to keep that ratio as high as possible. And just because it's the further you get away from that, usually you're going to get forced into some type of uniformity issue that's going to result in a countywide reassessment.
Okay.
which no county wants to do.
Is the county allowed to limit what they report, or do they have to report everything?
So they are allowed to make, I believe, calls on certain sales being not arm's length. I know there are some issues with county assessors when it comes to multi-parcel sales. A lot of the times those are reported differently. But ultimately, I think all arm's length sales are supposed to be reported to the state. And so a lot of times it depends on how they're coded when it comes through the county office as far as what goes to the state.
So the claim is that they didn't.
They didn't report all proper
They were
sales.
playing with the numbers.
Correct, that they're playing with the
The
numbers.
judge said, quote, cooking the books.
Yes.
And ultimately, there's an expert on the property owner's side, which is saying, based on all the sales, the proper common level ratio was this, 63.53% for tax year 2022, which is funny because the common level ratio for tax year 2023 has already been published, and it's 63.6%, which goes right in line with what they're claiming it should be for 22. So, and that's what led to the lawsuit and what has led to the reopening of the appeals.
Yeah, it's an expensive endeavor to do a reappraisal. And politically, particularly here in Allegheny County, I think it's always marked with the change of a county executive to a certain extent, going back many years, right?
Yeah, but Fitzgerald he's been around. Like, he hasn't gone anywhere,
No,
right?
don't forget, he also was held in contempt by not certifying the rollback in 2012.
Okay.
Okay, he fought it.
So this has been going,
Yes.
behind the scenes, there's a lot going on and has been for a long time.
Yeah.
There's typically always a few court cases that are pending that are challenging the process and or uniformity. Usually they don't make this many headlines because they don't lead to, such an important result, I guess. They usually don't lead to a result that's going to impact every taxpayer in Allegheny County, which this one has.
And I mean, what's wild to me, just on the surface, is you're talking about a rollback from 81 to 63,
Correct?
Which is
28% increase in county market
yeah.
value.
That should be the headline. It's not that there's a big window to appeal. It's that we're
Right.
talking about almost a 30% difference in numbers across an entire county of properties.
Yeah,
I mean,
it's a large difference.
how's that not the headline? I don't understand.
I think one reason it's not completely final yet. So that is the one thing that, that's where it's at right now. The court case is pending
Since
and
when
under
did the
appeal.
headline have anything to do with what's final?
Right. Yeah, I guess you're correct there.
Yeah, this is like the most vanilla portrayal of the reality of the
Absolutely.
situation.
This is a tax grab.
Yeah.
This is without a doubt. They're cooking the books.
Hanging on to that revenue, really not shaking up the apple cart to a large degree as well, because now you have less appeal work. But there's a lot of sales out there that support higher assessments that some are being appealed, some are not by the taxing bodies as well. But I think because I'm doing this business nationally as well, I've got a little bit of perspective with some of these other states, other jurisdictions that they're hyper aggressive and they fight for their values, or they simply say, you know what, we're not going to push the envelope. It's a smaller county. We don't have the resources to fight it. So that's a budgetary concern on just assessment appeals.
Right.
That they don't want to rock the boat, because ultimately a lot of those folks are elected officials at the same time. So if they are able to campaign on consistent property values, that's underassessed. The general rule of thumb, whether it's here or Atlanta where we are and so on, is when you get reassessed, a lot of the neighbors say, should I appeal my house? Well, would you sell your house for that number? Well, no. Then don't appeal it.
Right.
So keeps things a little bit consistent there.
And actually, in this article, it said that if you went and looked at your property assessed value, and it's 50% of what you think the market value is, that you should appeal. I found that staggering.
Yeah, I read that in the article as well, and I disagree with it.
Yeah.
Ultimately, if you're assessed at 50% of your current market value,
Seems like a win.
You should sit tight.
Yep.
There's, I've handled a lot of phone calls and emails in the last week or so. There was a news story that ran. There's the newspaper article. Ultimately, everyone's looking at their Zestimate right now to see what that is. But what you're worried about is your current market value. So, what's a property worth January 1, 2022? What's the property worth January 1, 2023? And if the assessment's greater than 63% of that number, then you should be looking at an appeal. But even right around 63, it's probably not worth it. Once you get north of 70, then you certainly want to, I think, look at an appeal. Now, again, current market value, it's not an exact number.
Right.
So there's things to look at there. But
That's
that's really what it is. The 50% number, I wouldn't agree with that.
That doesn't make a lot of sense to me either. It's and it's certainly messaged differently for residential versus commercial at the same time.
Right.
There's a threshold. You have a voter that's typically going to get maybe a little bit, a less challenging path to get a reduction, as opposed to the commercial. It's a little bit more involved. A lot more work goes into the appeal package itself and bringing in an appraiser where it makes sense. So there's a cost benefit that's tied to that conversation too.
Sure.
Yeah.
So, kind of rounding out the current event, and then we'll dig into just the whole impact on our actual business and our clients and your guys' day-to-day. Was this like news or not news? Like, should this be on the headline of every outlet in town? Or is this just kind of
Good question.
happening every day, and people really usually aren't paying attention to it? And I'm not picking on Belco, but Belco needed something to write about. Or is it like really news?
I think that the county trying to overvalue your properties by 28%, yeah, I think that's news. I think that's something that's worthy of being reported, and I think that's something that certainly the voting public would want to know.
Right.
Everyone has to pay taxes.
Mm-hmm.
They just hope and pray that it's going to be fair. This is clearly unfair.
It's actually it's a little bit on the opposite side of that. So the ratio being when it's dropped, right? It's 81.1 down to 63. And
right.
We can sort out the specifics, but that's that 28% increase. So if we look at it a different way, let's say your assessment on your house is $100,000.
Okay.
Last year, when we went through this for 22 under the 81.1, you're going to divide that 81.1, and now that relates to a county imputed fair market value of $123,305.
Okay.
Okay. So this is the value in which we are going to review for an appeal position, $123,000. That's at the 81%. When the ratio, which is still pending finalization, now is 63.6. That $100,000 assessment, again, your taxes are still the same on the assessed value. The imputed market value is now $157,000. So they were underreporting, actually favoring some of these taxpayers under the old model, but now you have an opportunity to reduce the assessment because that ratio drop increases the market value.
Well, then why would it be the taxpayers that were bringing the charge?
So the taxpayers were under appeal for a purchase price. So the way you get to the assessed value on a current market appeal, so you're in the process of being appealed. The school district comes in and says, they paid $1 million, property's worth $1 million. Under the old ratio, they win. Assessed value goes to $811,000.
Right.
Under the new proposed ratio, they win. The assessed value goes to $636,000, right? So their assessed value is going to be way down. Now, when you look at it as assessment to assessment, then the implied market value is actually going up when the assessment's coming down, but that number really doesn't matter.
Well, I think from just a strict taxpayer basis, they'll be looking at in 2022. Okay, you assessed me at $81,000, so I paid more in taxes. You have my money when all you should have gotten was the tax bill that I should have had on the 60%.
Correct.
So
Yes.
I don't think that was inverted. I think that's,
But it,
Yeah, no, what you're
it
saying
might
is
be-
correct.
it
They
might
are
be
being
the mechanics
overtaxed
and the
based
math
on
of
the
how
old
you
ratio.
came up with the calculation and the valuation.
Yeah.
No, I think you're
But the
correct.
point is, it's being challenged because you got my money and I want it back.
Ultimately, the taxes would be lower under the new ratio, correct?
That's-
Through the
okay,
appeal
thanks.
process.
Right.
Yes,
Yeah.
yes.
And it's also, and not to totally contradict the way that you frame that, because you're right. It's also the point of view. Are you being appealed by the taxing body, being the school district, seeking to raise your assessment? And that's where it benefits the purchase price times the lower ratio. When we're looking at it from the perspective of our owners, not on a school district increase complaint, we're looking at that saying, well, my goodness, that is now $157,000.
And it shouldn't be.
It should not be. So then we take the step and arrive at the correct market value. And let's just say hypothetically the correct market value is not 157, but 110,000. Now we take that 110, we get to the Board of Viewers, which is where you can enter into the settlement at the BOV, and then apply the common level ratio. It's just the process. You're now taking that 110,000 in market value times 63%,
The new CLR, right.
and you get a lower assessment there as well.
I think the tough thing here, just in the whole grand scheme of what's going on, is these school districts have the largest tax bill. They're the ones that participate in this process. They have nothing to do with the common level ratio. So, they filed these appeals. They're the ones usually having their attorneys handle these appeals. And ultimately, they're in a really tough spot now because they're going to be the ones losing the most tax revenue based on all these pending appeals. And they've actually filed appeals and had, hearings heard where at the time when they filed, it was going to be an increase case. It's pending now. There's nothing you can do to withdraw it after the hearing's heard. And now, could end up being a reduction. So, they may have filed appeals that looked like it was going to increase tax revenue, and ultimately it's going to reduce tax revenue. It reduces it for all the taxing bodies, but the schools have the biggest piece of the pie, so they're the ones that, are going to get the brunt of it.
So it's news. It's good news.
Yeah, it's definitely news, especially if anyone that's purchased a property in Allegheny County within the last probably 7-8 years has gone through the process. So it's something that a lot of people, I think, are going to click on, when it comes to being familiar with the tax appeal process after they go through it.
Yeah, my gut tells me if we had the tracking statistics of the link clicks on these headlines, it would be through the roof relative to the normal daily paper.
I think just by the emails and phone calls that our office gets based on the articles, certainly.
Absolutely. Heck, it's getting to me in Atlanta, so I see it down there too.
So we, we're kind of benefiting and cursed by the fact that this all happened in the last week in terms of the news, but we had invited you to come on today, not in particular to talk about the appeal process or period that's open with the county, but just about the impact of real estate taxes on the commercial property sector and our clients. I mean, we use the example of a $100,000 house, but these are multiple $1 million properties, significant impacts. We've talked to our listeners about gross leases versus net leases. I mean, there's a trickle-down effect about this and how it impacts our client, or clients, I should say, because you guys have them as well. So talk to us about like your day job and what you're really doing that's not necessarily on the headlines, but why the commercial property owners out there are reaching out to the Invokes and the Bernsteins to say, we need help because taxes are a major component of the operating expenses of a building. Usually, I mean, I would argue somewhere in the 50 to 75% of the operating costs of a commercial real estate parcel. So talk to us about your normal day to day.
Yeah. From a consulting perspective, we play in the sandbox that we have in front of us. So in this case, this court case can settle itself out. But working on a national level, we work with local property owners and then institutional REITs, Fortune 100s, and so on as well nationally. So we've got a client here that's got about 2,000 properties around the country. So we're out there making sure every single property that they have is fairly assessed. Now, they own, they lease, so we're evaluating market value for those properties. Allegheny County right now, we're in the weeds. We're in the weeds in Ohio. It's a March 31st deadline there as well. States like North Carolina that are doing reappraisals, we're busy with those as well. So working through that, we sort of look at it as the life cycle of the asset. So we have numerous clients that are developers and investors that are looking at multifamily on due diligence. So we do a lot of that front end due diligence around what do the projections look like, whether it's an acquisition, what happens on a sale in a certain county, and then new construction.
Yeah, let's talk about that for a second. We'll even use the multifamily example. So you're an apartment investor and someone's selling the apartment building for $10 million, and their revenue and expenses today in 2022 are X, but they pay $10 million for the property that is assessed today for 5. All of a sudden, the net operating income is a substantially different number once that sale transfers. At least in Allegheny County, Butler doesn't pay attention.
Right.
But in Allegheny County, it's a huge red flag that all of a sudden, hey, Mr. Property Owner, your real estate taxes just doubled. Right?
Effectively, now we'll go a step further. $10 million purchase price. What's your worst case exposure? Now the jurisdictions will seek the purchase price.
Right.
At a minimum, we're going to be able to apply the common level ratio to that purchase price. So in the case of a $10 million.
And that doesn't happen automatically?
No.
But that's specific to Pennsylvania.
To Pennsylvania, yep.
Correct. And it would be different depending on you work all around the country, correct?
In a state like North Carolina, that's a non-reappraisal year. So let's take Charlotte as an example. They last did a countywide reappraisal in 2019.
Okay.
They shortened their cycle, and now they're doing a countywide reappraisal in 2023. So we should have new values come April, May. If you were a buyer of an apartment project in Charlotte in 2020, that sale price may not affect anything unless there's new construction. And that's a totally different conversation to your assessment. So if the property is assessed in 2019 at $6 million, you buy it for $26 million.
Doesn't matter.
You're going to roll to $6 million until 2023 and that new countywide reappraisal.
And the countywide reappraisal, you're a little insulated from.
You're a little further removed from your purchase price.
Price.
You're probably looking more broadly to the market on sales comps as
Okay.
well as actual income and pro forma.
And in a
Okay.
dispute, that's the argument you're making.
Yes.
The sale
yes.
price is whatever it was then, because the world is different today.
That's correct. Yep. So we like to be able to, well, when property values are going like this, we want to distance ourselves. What other legal transactions or remedies are available? Do you do a drop down so that the purchase price isn't necessarily disclosed on the deed? To limit the exposure there. That's one piece. Other states.
How do you make that happen? I mean,
That's
we do a lot of deed research and a lot of property transfer research, and I always love the ones that say it transferred for $1. How do they pull that off?
Ultimately, I mean, you could put, the value that you want on the deed, but then in Allegheny County, I know, or in PA, you have to do a statement of value.
Right.
Ultimately, depending on the sale. I don't do a ton of transactional work, so and be cautious here. But ultimately, my understanding that with the statement of value, that they're going to be able to pick up a purchase price there, and you're going to have to pay transfer tax on what you're paying. I think a lot of the sales for $1 are sometimes they're corrective deeds or the same entity that might be purchasing from
Interrelated
each other.
parties.
Right.
So I think a lot of times you're running into that. But I do know, there used to be kind of a workaround with transfer taxes where, they kind of closed that loophole as well.
Yeah,
so,
I knew that they closed that loophole.
Yeah, the 8911 rule. So they've kind of worked on closing that loophole. And I think appeals is similar. I think, if the schools, are going to find a transfer one way or another, they're going to find it through statement of values or, other documents you're going to have to record. I know a lot of entities in Pennsylvania try to do just the entity transfer rather than transferring the property. They'll transfer the whole entity, which I think has a chance to protect you, but there's certainly no guarantee. If anyone finds out about it, I mean, they could still look into it and ultimately find out, I think, what was transferred.
And you're biting off a ton of liability that you might not want.
Right,
You're
you're
buying the entity's liability from whatever, not just real estate.
Yeah, so it's a much
This is
more.
my own personal pet peeve, but when people use the word tax loophole, the correct nomenclature is tax code. Somebody wrote it into. They didn't write it. Let me offer this as a loophole to be considered by the
You're just
legislature.
trying to bring Paige into the
I'm trying
conversation
to
without her
bring
here.
Paige into just in true deference to her. But somebody wrote that into the code.
That's correct.
It's part of a law that says I can use
You can
this.
do it.
Now, there's also the question of, is that going to be disputed, and you're going to have someone come back at
Have
you
to
and say
deal
you
with it.
can't do that? Yes, I understand that completely. But
Yeah, you're
just
right.
just a clarification.
I would agree with that. Code is, that's better than
Code
loophole.
is, but and now you can still try to segregate personal property from real property.
can.
Correct.
And then that will
Yep.
save you on the overall transfer tax.
Correct.
But that should trickle
And it
down
ultimately would
also
trickle down.
into the
Real
into
estate
tax
and the personal
component.
property
Yes.
value, right?
And a lot of sophisticated property owners that have done this a lot will make sure that they do. I mean, even in residential transactions now, you'll see chattel agreements all the time when
Yeah.
it gets into higher value properties, because if you can break that out up front and then make sure not everything is in the deed, it certainly helps your case when it comes to an
But the
appeal.
whole idea is that has to be a very justifiable expense, because one way or the other, that's going to trigger the school board or someone saying, hey, they're trying to skirt our taxes.
Or a state audit looking at the transfer tax
Absolutely.
deeds. Absolutely.
Absolutely.
And so we've done a lot of that over the years. I think a hotel is a very good example. You have real estate value, you have personal property value, and then you have intangible value as well. So what's the
Absolutely.
value of the flag of your Marriott or your Hilton hotel as well? So we've done work in the past with respect to those types of clients, carving out essentially the business intangible value as well.
Sure.
So yeah, if you're doing a hotel here, you absolutely want to minimize your real estate value, because one, personal property is not taxable in Allegheny County, and in the city of Pittsburgh has an exceptionally high transfer tax rate too. So you want to minimize to get to the right number of the real estate transaction and do two separate transactions where it makes sense. Yep.
And you were talking about how you think this is an annual thing. This isn't just like I bought something, I need to call Eric and James. This is something that Invoke looks at for their clients on
Every year.
on an annual
Yeah.
basis.
In fact, I was just at a client's office yesterday and said, tell me what you want. This is the way we'll structure our deal. I want to look at these properties every year. I'm going to ask you I&E, rent roll, any deferred maintenance. We're going to do our review, give you a target value, cost benefit, let's go. And that's the approach that we want to take every single year with those clients.
Is that to actually appeal it, or just to evaluate, to make sure that everything's kosher?
We're going to look to identify, we're in the business of property tax consulting, you might just say we're paid pessimists. So we want to say that this building right here is in disarray. We're going to find the lowest target value that we can come up with. So we're reviewing and coming up with a recommendation against that county value.
Absolutely, and most of the property that I own is in West Virginia.
Okay.
West Virginia has to report to you that they're increasing your assessment if it goes over 10%. So consequently, your value goes up by 9% every single year. And I'm a big believer you appeal everything, because every dollar you don't give the government is 100% return on your investment. And make no mistake, they will continue to increase your assessments. Never mind what's going on with the market. It's just something you'll constantly have to look at, because it gets out of hand.
Right.
And I'd say exactly the same thing
You're
about
right.
insurance.
Yeah,
Yeah.
a value unchecked. If you don't appeal your properties in Texas, the land of property tax appeals, every single year those values are going up no matter what. And they're
Every year.
monster increases every single year. It's no surprise that almost every single national or regional property tax firm has a presence in Texas.
And does Invoke have a lot of competition? I mean, are there lots of firms who do what Invoke does?
Yeah, it depends on how you want to frame that conversation. There's a few national firms. We're one of them, but
Okay.
we're one of the only national independent one now. So we position ourselves a bit more of it as
When
a
you say
boutique.
independent, what does that mean?
You've got a couple other firms, private equity backed, and so on, and they're larger, and it's just a conscious decision that we've made to
Okay.
be a little bit more client focused.
Okay.
We've all worked, or the guys that I work with today, we've come from one of those firms, and we're going to be client focused. That's our position that we want to take. So, it's not going out appealing a property, trying to go get yourself a reduction just to get a reduction. Let's get to the right number. I think like you guys as well now, I've got a few properties under my belt. It's my money.
Right.
I want to make sure we're doing the right thing, and that's the approach that we take for our clients here too.
And the more money, the more property you have, the more money you're paying.
That's right. Yes.
It's
Yeah.
it's a consistent thing, and it varies every jurisdiction that you're in.
Mm-hmm. And the other side of it is, depending on who your client is, they may have different priorities. So in the case of, let's just use a REIT or an investment firm, that's terms of NOI. Put a cap rate on that thing. Now we've increased our value, right? So that's one component. And
Right.
we work with a handful of publicly traded companies. And if we do our job right, maybe we move the needle, half a cent on the earnings call, and we've done our job that way to a certain extent. So it's just the perspective of who we're doing the work for as well. Corporate users versus investment owners.
And out of 100 cases that you guys get hired to work on, how many of them is there a reduction in the tax bill?
I would say overall, with a firm like ours, we're north of 90%. We really are,
That's
because we're doing the reviews first.
Is it so? Walk us through that. You're doing the
Yep.
review first. You mean you're giving them an opinion of what the outcome will be before you actually file?
Yes,
Okay.
yes, that is our general approach. Can I say Noblestown for a minute?
Sure.
Noblestown Road.
Yeah, that's fine.
2 years of appeal. School district went after that. This year, we're going to look at that one again. We're going to come up with our target value. We're going to apply that ratio and compare that to the current assessed value. And if there's enough, and generally, if there's, in my view, a $10,000 to $15,000 in gross tax savings is enough to start the car.
Okay. And why does it need to be $10,000 or $15,000?
There are additional
benefit.
cost
Sure.
benefit. If you don't have a sale, I would say 90% of the time, maybe more higher than that, you need to get an appraisal.
Okay.
So
you
there's
got-
a cost associated with that. The way that we structure a lot of our client relationships in Allegheny County is James and I work together. So we will incorporate the legal fees because I can't go to the hearing because I'm not an attorney.
I was going to bring that up.
Yeah.
So you guys are both sitting here. One's a consulting company. One's a law firm. Why do I need both of you?
Yeah, so in Pennsylvania, you cannot attend or, handle a legal proceeding unless you're an attorney.
Could I handle it? Like, so Noblestown
could-
Road, I own. Could I
you're
do
the
it
owner.
myself?
You could handle
You
it as
could.
the owner.
Yes.
You have standing, but
Won't do that.
Anybody who represents themselves has a fool for a client.
some of the boards of assessment have allowed different consultants and real estate agents to practice in front of them. None of the courts of common pleas will, though. So occasionally you will find a situation where a board of assessment may allow it. Not many anymore. Seems that gets challenged, I think, a lot. But ultimately, when you get to the court of common pleas, you need an attorney, or you can represent yourself. But ultimately, you can't represent anyone else unless you're an attorney.
And is the attorney side, maybe I'm too far behind the curtain. If I am, you can kick me under the table. But is the attorney side of the appeal a fixed cost?
We
Or
handle, it all kind of depends on size, I think.
Okay.
I think so. We have flat fee contingent and hourly cases.
Okay.
And we have, I'll have one client with 4 properties and 4 different fee structures.
Okay.
Ultimately, a lot of it depends on projections, tax savings, and a cost benefit. we try to make it make sense for the property owner and our firm, to both benefit from the process, right? So if it's not going to make sense for both of us, then usually it doesn't happen.
I got a question going back to that. Can you represent yourself? If Kevin Riley owns the property as KR
73 Noblestown Road LLC.
LLC,
Sounds familiar.
can he still represent himself, or the fact that he's an LLC, he requires an attorney?
So it's funny because we handle this issue all the time with collections work against corporations in PA. So in PA, if you do have an entity in common pleas court, you are required to have an attorney represent you. You're able to handle the magistrate level for collections work, or small claims court. You are able to do it. And then for the Board of Assessment work, you can certainly do it because that's not Court of Common Pleas level. I have seen, somebody do it occasionally in Allegheny County here, and I guess as long as there's no objection, it's not going to happen. But yeah, you are correct.
So you're saying I can't represent myself?
You can't, depending on what the level of the court is. In magistrate, I'm allowed to represent myself.
Correct.
What is it? Circuit court is the next step,
Board of
So
Appeals.
in Allegheny County, it would be Court of Common Pleas. It's like this lower state court.
which is the equivalent of a circuit court.
Correct, in West Virginia.
Okay, in West Virginia, it's a circuit court, and I couldn't act on my own behalf if the property is held in an LLC.
Yeah, or any type of corporation. Correct. You need to hire.
Or any kind of,
Yeah,
that's
you
right.
have to hire.
Okay, yeah.
You have to hire an attorney at that point.
Okay.
Absolutely.
Yeah.
And so your fees on the law side are any one of a different couple ways. How about on the invoke side of the coin?
Generally, we are contingency based, so we're
Okay.
performance based. It's a human nature business. For us, we want to go out and get the absolute best result in savings. Then it maximizes our fee potential.
Right.
Competition will limit, with fee caps in certain states and so on, which is a little bit more customary.
Wait, say that again?
So certain states, it's a little bit more customary to have fee caps.
Okay.
So maybe 10, 25.
And the state puts the cap on?
No,
or
competition.
competition.
The market.
The market says, no way, no how, I'm not paying more than this for that.
Correct. That's correct.
Interesting. And that's a state
like
thing.
Texas, because it is the land of property tax and assessment appeals and the competition there. That's very much
I need to call some friends in Texas, I think.
that's a fee cap driven market there.
No, I'm just teasing.
It's just not as much here.
But yeah, so generally we'll do it that way. And then I've worked with James and several predecessors there, and go back to my days at Ohio University with Kirk Berkeley there at the firm, and Kid. So we've got a great relationship. So with certain clients, particularly here, it's a value add when we're working with our clients. So it's one fee, client doesn't pay until we deliver savings, and you get me or my team and James and his team.
Okay.
So we work together. I talk to James several times a week, depending on what we have going on, and we're essentially talking about our clients' cases to make sure we're covering it from all angles. So I look at it from the perspective that these are value-driven arguments. Now, there are always case law, arguments to be made there in conjunction at certain times, and that's where we work really well together. We've been doing this since I started in Pittsburgh back in 2010. I've been working with Kirk's firm, so it's a great working relationship, and the clients know that relationship. We go into it that way.
Sure. The appeal process, 90% success rate is crazy good, right? Is it art or science?
Valuation is an art.
Yeah, it feels like an art,
Yeah.
right? Because if there's always wins, either you're just really good at not picking clients, or there's a lot of art.
Yeah.
Which is, and I bring it up not because I think that that's a bad thing. I think that's a great thing. And we're consultants, and I always argue we are performing art. We're not performing science. We had a call this morning where we're getting asked for advice, and at some point it just becomes a gut. Like there's no rule book for what's happening in this project we're working on. So at some point they're counting on an instinct or an art, is the way I like to describe it.
And can you back it up?
Yeah.
Right? Can you back up your argument? The old appraisal firm is
That's
what?
right. Bury them in paper.
If you got two
Yeah.
two appraisers within 10% of each other, they're both right.
Yeah.
So it is the opinion of one. So we're here to convey this property is not worth what somebody else says it's
And if it's the three
So you're
appraisers,
saying appraisals aren't etched in stone?
tax.
Come on.
See,
Wait a
I like
second.
tax appeal
that's
appraisals.
blasphemy.
Blasphemy.
Depends what your
We
reason
need to have
for
an
the
appraiser on
appraisals.
this show.
Yeah. Oh,
What's that MAI stand for?
made as instructed.
Oh, yes.
That's and also when you say it's a 90% success rate, there's also degrees of success.
But if I own the property and I save $1, it's successful.
it's successful.
If I save $1 after having paid these fine gentlemen,
Oh, no,
I'm gonna win.
I agree with that.
Right?
I agree. There is absolutely no downside to doing this, and I agree. You should do it all the time.
Mm-hmm.
There's not a piece of property that you have that should not be questioned. What someone else is saying. Hey, by the way, you owe me money,
Mhm.
and it's always going to go up, and you want it fair, and you have to pay it. So every argument you make to pay the least amount
Mhm.
is better for you.
Yeah,
Sure.
and we run the
Really?
list. Let's keep it sort of simple, right? Let's look at the assessor record card. Do they
Yeah.
have the right square footage? Do they have the right land? All of that, the right acreage. We're checking that, and then we're looking at if it's a shopping center. Of course, we're going to look at their I&E. We're going to look at the rent roll. Can we go back now? Our folks in Texas are doing this for the first time this year as it relates to 2023 appeals that are upcoming. They're rebuilding cap rates. They're going in because of the way that the interest rates increase so much. If you bought something in, beginning of 22 that now is affecting the roll for 23, that world changed when you got financing lined up a year and a half
And
ago.
if I'm going to use any kind of number, I want it to be a 2020 or a 2021 number because of the impact of COVID onto that property. Maybe the rent rolls are not quite as high.
Right.
Yeah.
I want to use every piece of armament I have to make my argument.
That's right.
Yeah.
Yep.
So we got time for, I think, 2 more questions. The first one is, so we're in a multi-tenant office building. I want to say there's 40 tenants in here. The tenants indirectly pay the property taxes. We have what's called a full-service lease with a base year. So we're exposed to real estate taxes increasing. Landlord passes that back through to the tenant. How many of your clients are the tenant in a building that they don't own?
That's hysterical. That was my
Right.
question.
It's a good one.
I was to say we have a lot of tenants, but it's typically a single tenant property. I mean,
Okay.
obviously, we don't.
So they're totally on the hook for the bill.
Correct,
Versus they're partially on the hook for the bill.
for the most part, any tenant appeal that I've been involved in has been triple net lease, single tenant property.
Okay.
Right involved in the lease that says the tenant's handling the tax assessment appeal because they're going to be the ones, handling any increase or, getting money from any reduction.
And do they need a portion of their lease to give them that right in order for you to go in front of the appeal process, or no?
They need to have appeal rights in the lease.
Yeah. So typically they have appeal rights
So, like-
in the lease.
Alert to all clients out there.
It hurts, right?
You need that right in your lease because it's not usually there.
You're right.
Correct.
And,
Now,
and typically, when that clause would be enacted, it would say that if you don't do it, I have a right to.
Right.
or simply requires landlord approval. So
Yeah, I
we've
was
done
gonna say
that.
a lot of them. Yeah.
That's absolutely.
I'll go, and they're no longer around, but we did work for them for the past 15, almost 20 years, DCT Industrial, which
Okay.
eventually rolled into Prologis.
Okay.
And I remember this because I was just getting started in Cleveland, and then that's where most of their Ohio portfolio was, in Columbus and so on. They did a really good job. And I say that in the context that they were the landlord. They were the asset managers running those properties for triple net leases, mostly, right?
Yeah.
They were working with us to go and reduce the taxes, in effect, proactively for their tenants.
Which
Now,
keeps them
savings
as tenants.
Keeps them as tenants.
Which is-
exactly.
which is fantastic.
They did a great job, in my opinion, doing that, and it worked. Our fee got passed through to the tenants pro rata.
Right.
They got the benefit, and then they were more inclined to renew, and then the base nets, right?
Yeah.
That they're getting a higher number on the bottom
As a
line.
legitimate operating cost, and in typical tax audits, that would be in there. It would be baked in the cake that this is a cost that's borne by.
Yes. Yep.
tenants.
Exactly.
One of the guys in my EO forum, he is not a Warren Buffett fan because he thinks that Warren Buffett points out like the Captain Obvious stuff, like yes, you should go to the bathroom in a toilet, and yes, you should probably use toilet paper. Like these, like you don't need to go to Harvard to figure this one out. It seems to me that if you own a piece of property, you would be insane not to be appealing your property tax
At
situation.
least looking at it.
Yeah, I would say reviewing
Yeah.
it annually is definitely the thing. I mean, some properties in Allegheny County are so under assessed that this change is going to do nothing for them.
I should have said review it. every
Correct,
year.
review.
Yeah.
Just because we have plenty of clients that have called or are in the process where, I mean, especially in pockets of the city where just the increase in property values has been insane over the last 5 years, where assessments might be 150,000 and all the houses are selling for 750.
Right.
Yeah.
It's
But
so
it's
so
the
it's
validation.
tough, but you have
You
to
know?
look at it.
It is, yeah.
I don't know, but now I have somebody else that's telling me I was right.
Right.
It's a
You know?
second set of
So
eyes.
I'm just
yeah.
going second set of eyes. I'm not going to pay attention to it this year, but now I know what the baseline is, and I can watch it going
Yes.
forward.
Yep,
It's not
absolutely.
worth it today, but it's definitely worth it.
Yeah.
Right.
And a closing comment around Allegheny County in particular, and really the state of Pennsylvania, with respect to the common level ratio. When they set that at the stub each year, that takes into consideration all property type sales. So multifamily and industrial are way up here.
Right.
Hypothetically, well, the state of the CBD is a different conversation. It's way down here.
Right.
But because these are the rising tide, they're pulling the respective assessed market values
Up.
up. Exactly. So there are unintended consequences to mass appraisal. It is what it is. And that's why guys like us, go out and do what we do.
Which is great.
Yeah.
So we always end with trade secrets, aka the name of the show. So since we have two guests, technically, I guess we're going to get two trade secrets today. But whether it's Invoke or you personally, or Bernstein, Berkeley, what are your two takeaways for our guests about your trade secrets?
Now for you.
Trade secrets as far as our firm in general, or
Or
the real
your
estate
career,
tax
or-
assessment appeals,
Or real estate tax appeal, whatever is give the audience a peek behind what is driving either the firm or your success.
I guess I don't know if it's actually a trade secret, but ultimately with the tax assessment appeals and since I've kind of switched teams from the school district side to the property owner side, it's been an insane couple of years in tax assessment appeals, which has really driven the success and reductions we've been able to get, which were kind of accidental. I don't know about accidental, but just consequences of what's going on. So I've been here for 3 years. The very first year was COVID hit. So, numerous appeals just based on COVID, reductions in income tendency. And then obviously the second year was kind of just a second year of COVID and then office space and tenants leaving. And now the third year we have this common level ratio. But I think ultimately the secret is just, every year there's going to be something big out there that impacts value for at least a class of properties. Mm-hmm. And so, we've kind of, centered the whole discussion around, it's just making sure you have someone that knows what they're doing, reviewing annually the property taxes so that, you can find out whether or not, you're paying your fair share or not.
I think his trade secret really is going from the public to the private side of the business. That's what I heard. I heard left school district, entered private business, and
Public defender, criminal defense.
but not putting words in your mouth.
That could have been it.
How about you, Eric?
I think, and this is really specific to a few things that I'm working on personally, but as much as it is with Invoke, go bet on yourself. Go be an entrepreneur. Go take that opportunity, find it, have a plan, and execute on it. And that's what we're doing at Invoke. Our team generally has worked together for the past 15, 20 years.
Okay.
We have an opportunity, what we're building here, and we've been building our runway with an existing organization that's been around for a long time, and we're taking it to the next level. And we have a great cohesive partnership that we're bringing together with this group of guys and gals in our company, taking care of our clients one day at a time, one property at a time. So bet on yourself and go get them.
Totem loves that,
Heard it
man.
said.
Bet on yourself. Gotta love that.
I just got to add one thing. My father always used to tell me, half of being smart is knowing what you're dumb at. And this is a very complicated thing, and it's a lot of money. So you have to have people that play in this arena all the time. When you first started talking about, the nuances of this particular lawsuit, there's a lot of moving parts there, so you really want to go and get experts for it.
Mm-hmm.
Which is really why I think the headlines are laughable. How like how vanilla they are compared to what the headlines of things usually look like.
Absolutely.
All right, so the
Absolutely.
bourbon. We didn't touch much on it, but we're drinking Breckenridge bourbon whiskey. It's a blend, straight from the Rocky Mountains.
Oh, the Rockies. I like the Rockies. I liked it.
He does have to Vanna White it every single
Yeah,
time.
no, I do.
Is it a yay or a nay?
I'm going to give it a yay, but I give
You give everything a yay.
I give everything a yay.
It's definitely not in the top three.
No,
From my
but it's still
perspective.
a yay. You don't like the Rockies?
Nah.
See, this is a
Top
whiskey
three is
with
a tough. That's a tough
snow
grade.
melt water.
Straight out of Breckenridge, right?
Yeah,
That's
come on.
commercial.
I like
Yeah.
Breckenridge.
It's lovely there.
It's a little
Yeah.
commercial.
Give me a little Angel's Envy. I'll bring it next time I'm in town.
We haven't done Angel's Envy on the show, I don't think.
Oh, that's a good one.
It's
it really is.
definitely not Hirsch or Basil. It's just somewhere in
Oh,
the middle.
no, it's not. It's not, but it's good.
Yeah.
It's good. I enjoyed it.
Gets the job done, I
It's
suppose.
winter in
Absolutely.
Pittsburgh, so I went with Scotch.
Hey, we had
I'm
sunshine
not mad.
today. That's a
right.
first. Podcast has had rain every episode up until the day you guys showed up. So
That's right.
thanks for coming today.
Thank you.
Yes,
Thanks
this
for
was
having us.
fantastic. This is great.
Appreciate it.
Yeah.
Really, really insightful.
And obviously, if you're out there and you're listening and you want to take advantage of real estate tax appeal and see where some money might be buried, James or Eric are great people to reach out to. So thanks for coming on.
Thank you.
Thanks for having us.
All right. That's a wrap.
Thanks.
All right.
Appreciate it.